You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it's time to rock out once again with everyone's favorite bi-weekly source. I know it's mine, hopefully it's yours. Your bi-weekly source for all things options, a little bit of wit, a little bit of wisdom, a little bit of analysis, sprinkling of unusual activity, a whole bunch of what's trading, some of your questions, a little bit of strategery. Mix it all together, you got the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, you guys are just devouring it these days, ever delicious, hopefully, you guys are devouring it, Options Insider Radio Network. We're here for you in these troubled times, and also in these times when you're kind of home. And we'll probably want to listen to some options and volatility and financial-oriented content. We got you covered. Whole bunch of shows, 13-plus years worth of content. The best place to find it all, of course, the full network feed. So if you haven't subscribed to that in iTunes, wherever you get your podcasts, of course, you can always go to our website or to our mobile app as well. It's all there. And just hit that button, subscribe, sit back, relax, learn a thing or two, and maybe you'll feel a little better about what's going on out in the marketplace and in the world after listening to all of that. And, of course, you guys get us live every Monday and Thursday at noon Central, 1 p.m. Eastern, via the Mixlers if you want it in your ear holes instantly. I know quite a few of you do. Then head on over there to get it there. And, of course, keep those questions, those comments coming, and those votes, all the other stuff you guys do. We'd love to hear from you guys. And joining me on the program today to help me parse and make sense of the madness that is our world right now. First off, we got, once again, from his locked down, isolated compound on the far shores of these here United States. So he was social distancing before it was cool, listeners. Yes, it's the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmeline Capital. Mr. G, welcome back to the program. How goes the distancing, a.k.a. Thursday, to you, sir?
You mean a day with a Y?
Yes, exactly.
It's fine. The sun is shining. Nothing looks different from my house. But, of course, I look at Twitter or turn on the computer, and all hell has broken loose, apparently.
That was your first mistake. So, you turned on Twitter, and that it just goes downhill from there, sir.
Yeah, so I try to look at it as little as possible and go, wow, everything's on like a 30% off fire sale. A little bit less than that now, but Well, we can talk about it during the show, but my life goes on. Although I have had anecdotal people around that were potentially contaminated with the coronavirus. So even less people come to visit us than did before. If that's possible, even less now. The number is now negative.
Even in the hinterlands of Maine, the coronavirus has reached that far. I bet you it was the clam pirates. You can't trust those folks. They're bringing that contagion to your shores while they're stealing all your delicious clams. Let's also move on a little bit farther out to another quiet, another tranquil hamlet, where hopefully they are untouched by disease out there as well. Of course, talk about St. Charles, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you as well, sir.
Always happy to be here. Still no clam pirates on the Fox River, but I'm watching for them. And Andrew, if I see them, I will lay the smack down for you here in the Midwest. I'll be your Midwest clam pirate person to make sure that we don't deal with any of that stuff.
Interesting. Hey, I don't know if clams are big on the rivers, but hey, if they're out there, the pirates are going to steal them. So you got to keep an eye out. Clam pirates, they strike when you least and perhaps where you least expect it. And last but not least, I'm not sure where he's joining us from. We'll have to find out. But he does have the coolest title on the program. He is David Russell, the Vice President of Market Intelligence over there at TradeStation, a.k.a. he's the market spy over there. He's spying on the market, so you don't have to. Mr. Russell, welcome back to the program. Where are you joining us from today, sir?
I am off in the hinterlands, kind of traveling a little, but I'm based out of Chicago.
Well, there you go. One of these days, in the somewhat distant future, when we reopen the studio to in-person guests, whenever that may be, we'll have to have you back in the studio in person so we could do this face-to-face. But for now, let's keep on rolling virtually into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what the heck is trading. And, I'm getting a little bit of a whiff, a little bit of an aroma of kind of mid to late January. We had a little bit of that feeling there. We were talking a lot on the show about, the market doesn't really seem to be pricing in what's cooking out there overseas and with this whole coronavirus thing. And here we are, finding ourselves today. Well, we'll get to it, and then you guys can decide for yourselves. Even though I can see from your feedback already that I think you're kind of feeling what I'm putting down here. Let's start off with yesterday first. We finally did it this week, the first time this week. We actually had two up days in a row. That's the first time since February 12th. Every other time since that we had rallies. We had strong rallies, but they were immediately followed by just cutting the legs out, pretty aggressive sell-offs to the downside. Not so much the last few sessions. We actually had a couple of sessions in a row of closing up. And, of course, a lot of that driven by this $2 trillion, two with a T. Easy for me to say. $2 trillion stimulus package. Yeah, it dwarfs the New Deal. Dwarfs about anything else we've ever done from any sort of recovery or stimulus perspective. Market liking what it's hearing. Our neighbors across the street, Boeing, who've been complaining that they need a handout or they need a bailout, really, to save themselves from bankruptcy. Not so much that they want to give up an equity stake. Not that far. They don't need it that bad, clearly. But still, been complaining. They were up almost 25% yesterday on the news. A lot of other big names were strong. Of course, it didn't end the day as strong as we started, so maybe that was perhaps a bit of a sign. People were a little worried on that. S&P closing up, but only ever so slightly up about 1%. NASDAQ actually closing down on the day. So I guess if you look at it from across all the major indices, then it wasn't a full up day, but we'll take what we can get. Coming into today, the news was pretty dire. Of course, the U.S. passing 1,000 deaths in the coronavirus for the first time. And now, of course, also the jobless claims everyone thought was going to be terrible were, in fact, pretty terrible. About 3.3 million new jobless claims last week. That just shows how a large swath of the economy continues to effectively just be out of work, unemployed. They can't work. Restaurants, all the hospitality industry, airlines, rental car, all these things that, rely upon some sort of mobility of the population and ability to go out and do things, just have ground to a halt. And so nearly 3.3 million, this is pretty much a record for initial jobless claims well over the 1.5 million that those so optimistic economists were forecasting. And yet the market just loving all of it, just eating it up, gobbling it up, shrugging it all off, whistling past the graveyard, if you will, out here. S&P up 4.25% right now. NASDAQ up 3.5%. The Dow leading the charge up 4.5%. So apparently, despite the fact that we're seeing some, shall we say, negative indicators out there, the market is liking what it's seeing. Coming into showtime, the VIX was at about a 58. It's a little bit higher now, 59 in the third. That's still down almost 10 handles from where it was last show. VVIX, a.k.a. the volatility of volatility, that's come in a little bit as well. It's hard to say come in when it's still at 167. That's still outrageous by most measures. But still, it's down about 15 points from the extremely outrageous level that it was at on our last show. And our old friend VXX starting to kick back down again, back down to 47. Remember, it was threatening 70 not so long ago. So the volatility out there has been extremely expensive, but I guess you can say, at least for the near term, it has merited it. Let's go back around the horn the opposite of the way we just went. Let's start with David here this time. David, what's lighting up your tape? Are you getting that same whiff? Are you getting that same ear of the market kind of whistling past the graveyard here? And what's lighting up your tape over there in TradeStation land today, sir? We'll get to some of the trades you highlighted in a little bit, but let's talk about now what you're seeing out there, sir.
Well, thanks. I think in some ways it's maybe not so much whistling past the graveyard as much as coming back from the dead. The market sees all these things before they happen. And it's interesting from my perspective because, when the market was crashing, a lot of people at the time a few weeks ago had no idea what was coming, that these kind of lockdowns were coming. And the market anticipated it. And now, I think when you really look at it, the big story from my perspective is what's happening in the credit market. We've seen, I think actually the junk bond ETF is in the midst of having one of its biggest, percentage bounces since the financial crisis. Like I think it's JNK. This is showing that what the Fed did on Monday, and then the other thing coming from this $2 trillion coming from the government now. The risk of going from an economic slowdown to some kind of contagion, the actual contagion now has been pretty much at least removed as any kind of risk that's really there. And so now we're in a situation where a few more weeks of lockdown, the market knows that, but we are now down, holding these levels from over a year ago. So now it's really a question of the market was looking at the future before it saw this crisis coming, but now is looking out, President wants to say Easter, maybe that will be that, maybe not. But the thing is that now the market's looking out to this passing. This morning, Jerome Powell was on, I believe, NBC's Today Show, very optimistic, basically saying, we'll just keep shooting the bazooka of cash at this economy. We're not having a problem with that. The economy is, the other aspects of it were strong going into this. So I think the market now is starting to look past this to a certain extent. Now, we have significant momentum to the downside still when you look at a lot of the, the charts. But at this point, it looks like we're entering that phase where the volatility and the fear have really started to subside. It doesn't mean the market's going to go straight up. But now I think we're looking to the point where the contagion aspect of this, the aspect of everything just blowing up, that is now being removed emotionally. And so I think now we're settling back into a sense of normalcy. We're still looking at, 3 million jobless claims. Next week's, non-farm payrolls will probably be hideous. Earnings season will be full of all kinds of things. And we have, still growing, cases in terms of people being infected with coronavirus. But now I think the market is getting rid of that initial terror, very much like we said earlier in the week. And that's why I think we're starting to see the VIX kind of creep in now. And we could also see the term structure in the VIX return, more toward, a contango situation, which I think is also all those things going back toward a sense of normalcy.
I certainly hope you are correct, David. I hope I'm just being a worrywart. I hope I'm on the other side of the spectrum, and we are starting to get past it and price in something that is beyond this madness. I see reports come out of New York and others and now New Orleans, that these cases are escalating. So it does give me some pause out there, but in the market clearly not having pause, and so I would be very happy to be incorrect in this scenario. Hey, that's a good thing, right? Listeners, vol's coming in a little bit. Some of that downside protection, the skew index, other things coming in a wee bit. So if you do have concerns, market hitting a little bit of a reset button for you, getting a lot cheaper to put that protection on, you may be worried about, again, you may be wanting in this environment. Also, a nice little upswing for a couple of days, probably taking a little bit of the pressure off, hitting a little bit of a release valve on the pressure cooker for all the legion of market makers out there who were probably getting a little strained by the continued one-sided markets out there. Mr. Rock Lobster, same question for you. You haven't been on in a little bit. What's lighting up your tape from the compound there, and what are the crazies in the pit chat and the vol trading club? What are they up to these days?
Most of the trading has been super short. Put butterflies into the short-term rallies and Inspire SPX. A lot of time spreads, like call time spreads, like out of the money type stuff. So yesterday we looked at like 260, like a March 2730 260 call time spreads. They were like 75 or 85 cents or something like that, and they're closing them today for around $2. Just like a lot of short term. I mean, Gamma is kind of king right now, even though VIX is high. Being long Gamma, anything that just basically has a little positive curve to it makes money. You just have to be there to trade it and put it on and take it off. But that's mostly what the pit crazy guys are doing in our chat room. It's worked. It's worked well. Our guys have done fine. So it's just been that kind of a market. But was anybody getting like aggressively long at the bottom? I would say I don't think anybody was really getting aggressively long. I think this is much better news overall. But the government's kind of fired all its bullets for the most part, and we hope these quarantines and all these things get over. I think overall the news has been much more positive, like with drug therapy or potential, like these are drugs that are out there that could treat stuff. I think the biggest problem is like this just non-treated, blob that was going to just consume all these cities, and it looks like there's potential for treatment. So all these things are, all positive developments. So hopefully things start evolving and climbing out of the hole again, and restaurant people, hotel, like people can kind of get back to their gig. Obviously, though, there will be a lot less, spending will be lower. I think, though, there will be this will create opportunities now that, people aren't going to forget this. So, how does that change, how does it change society, and how does it change companies? And, what is all this mobile testing going to be for people? I can see no swabs everywhere. Like there's going to be stuff that changes. I don't know how it all works out, but as of right now, it looks better. Having some numbers come out, I think, has been helpful. Now, everybody knew the number of employment number was going to be bad. Now they know how bad. Like, okay, historically, countries can deal with unemployment because you can always find a way to feed people. What they can't deal with is hyperinflation or sort of just the whole crack in society thing happening. That is much tougher. So, if you're gonna be a policy manager, historically it's been better if people go out of work for a while and you start to slowly try to fix the problem instead of you letting everything else break apart. So I think, they took the only policy that they could take was, okay, let's try to do something to fix the problem, and then we'll go fix problems that we can fix later. So, and I think right now it looks like the wise policy, although it is possible that, how severe this virus is not quite as severe as we think, even though it's serious. If you keep it out of old folks' homes and keep it out of sick people, then it's not quite as awful as everybody thought. It's still awful if it gets there, but it's much more, let's say, controllable, manageable, however that is. And then we don't know yet, but the market seems to be discounting it a little bit, meaning, the virus is bad, it's serious, but maybe it's not as bad as we thought 2 weeks ago, now that we're in it a little farther. At least that's my perception and kind of what's been happening in the world. Obviously, Europe got run over, the Mediterranean got run over. And I think it's just because of their society, like they're around young people, around old people more, which apparently is the worst thing. But from a Gamma point of view, being long gamma has been the best thing to be over the last couple weeks, because if you sold a put over the last 2 weeks, unless your timing was just ultra perfect, it was pretty hard to trade. So I think there might be some people might have a little buyer's remorse that they didn't get the bottom or something like that. As much as I'm happy the market's kind of stabilized, I still think there's some reckoning coming as far as how much all this is going to cost. And so it wouldn't be surprising if we were a little lower, in the next few weeks or so at least. But for now, things are kind of, let's just say holding up at a level. And now I guess the sun is shining. Everybody's looking out. We can see what's going on.
Wow, I'm kind of freaked out here because you're usually my go-to cynic. You're my resident pessimist. If I need a dark cloud, I turn to you on the show, Andrew. And now even you are talking this up, which is kind of just blowing my mind. You're shattering my worldview here. We just did the advisor's option yesterday on the network, and there was no optimism to be found on that one. So interesting. Very much a polar opposite here today on the option block, which is intriguing. Mr. Uncle Mike, now you're going to flip the script again. I'm going to come to you for my optimism, and you're going to tell me the world is ending. So what is going on? Are you about to throw my world into flummox, sir?
We're all going to die.
Yes. There we go. That's what I expect. Thank you.
How do you do that? How do you love it? So let's look at a few things that we have going on right now. First off, we're on pace to have a really big week this week in the S&P. We start off just with, I'm looking at I follow SPY typically. We start out in the high 220s. We're in the high 250s right now. And it's kind of weird. I remember just looking at the market when it was only up like maybe 20 points during the day at some point today. And the S&P, I'm like, holy cow, this is such a boring day right now. And I can remember a month ago thinking that would have been a pretty exciting day of movement, how the world has changed so much. So one thing that I was thinking of the other day that I wanted to talk about on the show is I was watching a movie, and it was a movie about investing. At the beginning of the movie, it says, I don't know how we can maintain these levels. We're borrowing money at unprecedented rates. We have so much debt. At some point, this house of cards of our economy is going to collapse. And that was the sentiment at the time of that movie. And that movie is actually Wall Street from back in the mid-'80s. And so what I find interesting about this $2 trillion package is that the things that everyone's going to say about it are, well, where's this money come from? I mean, I have a hard time believing that the United States Treasury just is going to write a check for $2 trillion. Oh, we just had it in our checking account. No big deal. Here you go. No, it's going to come from somewhere, but where on earth does this all come from? And we all know this is all just another complex way of printing money. There's no doubt about that, and creating more debt for the deficit, of course, or the national debt, of course, in time. But my point is that the concern of this being a house of cards economy, that's been going on for 35 years. And so I guess it's really not surprising the way with which we're handling this right now. Now, is this going to be of great help? Yes, no, maybe, who knows? But my point is that creating more debt and making it greater and greater and greater has just continually been no big deal, at least for the 35 years since the movie Wall Street's been out. I think the last time we've had a surplus year or a balanced budget, I think was in the Nixon administration. One year they had something good. And I think 1 year Clinton had one too when they started the Roth IRAs. So that got more tax dollars instead of traditional IRAs. And it worked for 1 year, I guess. I don't know. But anyway, more debt to the U.S. government just really doesn't seem to be an issue, and no one seems to care. So that's how we solve the problem. We print more money. Now, with what's going on right now with this virus, I think the next 2 weeks are going to be very critical to determine if this is just the calm before the storm, or if this is something to where, hey, maybe we are making progress, maybe things are getting better, maybe it's at a point to where we can start going to work again in another few weeks, or in our cases, leaving the house to go to work in another few weeks. But we don't know at this point. And so I think at this stage, there's just a lot of uncertainty. I think it's very important right now to have a plan for in case something like this happens. I mean, I've said on the show before, I'll say it again, for my managed trading, for my aggressive trading, I've been out of this market for a long time. If the market's not strong enough to be positive, I can't trade. It just doesn't work for me. Uncle Mike Permabull with this market, the two just don't match. So I'm not invited to markets like this. I get that. I respect that. For my hedge trading, I'm trying to maintain my lines in the sand as best I can, and we're doing pretty well on that so far. But for the buy and hold section of the money with which I manage, I'm buying and I'm holding because the people that I have in buy and hold, the stocks that I have in buy and hold, I have them for, or the funds are for 5 to 10 year time horizons. And so I have very large amounts of confidence in that we're going to be above those levels throughout that where we are right now over the 5 to 10 year period. Is there a lot of pain right now in that? Yeah, but thankfully I've allocated risk in proper ways to where people can take the pain, hopefully. The only thing that I'm concerned with, and I've said this over the course of the last couple of weeks, is that I would feel more comfortable right now with this market if my clients were calling me saying, what are you doing? You're supposed to be this option guy. How come my portfolio is down 2% or whatever? And I get yelled at. I'd feel more comfortable with this market if I was getting those types of phone calls, but that's not been the case. A vast majority of my clients that I've spoken with have all said, what can I buy right now? This is just the buy of the century. This is just such a buying opportunity. What can I buy? And so when retail investors are saying that consistently, and I get a lot of calls like that right now, it's kind of concerning that people are wanting to buy this market right now at the retail level. So no real scientific data to back that up, but that's my little contrarian indicator, my contrarian anecdotal indicator to add to this show.
So Rock Lobster is optimistic. That's the sign to fade this rally if ever there was. Uncle Mike, a little bit more, I think, kind of nuanced, middle of the road there. And the client's certainly bullish. So maybe the mixed signals coming out of there. Let's see what the market has up for us here. Kind of a light day overall volume-wise out here, looking at big indices like the VIX, only 181,000 contracts on the tape right now, even though the S&P was up about 4%, close to it right now. Out there, again, kind of just shows we've had pretty much almost every day has been plus or minus this percent. So when you have that 8, 10 plus sessions in a row close to it, then you're not going to generate the big swings in volume with yet another 4+% move. Only 181,000. ADV 1.35 million. Doesn't seem like we're going to get there today. SPY still rocketing though, up to nearly 4 million contracts, 3.7 million as of a few minutes ago. The ADV 6.65 million continues to grow out there. SPY multiply listed, maybe is starting to take down some of the SPX paper that could be having issues out there as well. The S still cranking along, though. ADV is a little lighter than it usually is. It's shy of 2 million right now, but still, it's about 1.5 million. About half of that on tape right now, 756,000. The Qs, 411,000 contracts. ADV, 1.2 million. And the Russell, at least coming in IWM flavor at 419,000. The ADV, 683,000. Small caps leading the charge to the upside this week. We'll get to that more in a little bit on TWIFO later on the network. Before I get to the most active individual equity options, I'm curious, Dave, we've heard reflections. The Flow Master's been on the show earlier last week kind of talking about some liquidity concerns, bid-ask spreads, obviously wide right now. Are you hearing this anecdotally from your clients and customers over there at TradeStation as well? Are they calling you up saying, hey, I need help executing this. How do I put this in this market? Is $2 wide, or are they still kind of cranking away despite these markets over there?
Well, what we're seeing, it's interesting when you really dig down, and I'm always impressed by just some of the things I can see when I look at what some of the activity is that our clients are focusing heavily on SPY, and I mean, we are talking about options here, but futures. And in a moment like this, if we really look what happens, the real activity shifts and it pivots quickly on things like the S&P futures, and it focuses on SPY, both on the equity, but especially on the underlier side. So if we look right now, I'm looking at in terms of underlying activity, I mean, like I said before, coming into this crisis, SPY had really lost a lot of interest. We had seen people shifting to Tesla and Roku and Apple and Netflix and Facebook. Now it's SPY. I mean, nothing even comes close to it this week in terms of our options activity. So we're seeing people really hone in because They know that that's really the area where they're going to have liquidity in the market. Now, the thing is that we're really proud of the fact that we've had no outages or no major significant issues of any kind, during this situation. I mean, across the broker space, there have been various issues and things, but we have always been able to deliver for our clients. There's a lot of interest we have right now. More people coming in than we've really ever seen before. It's really exciting, but there have been, no kind of major, systemic or broad issues at all. And I think if anything, what we're seeing the clients, they recognize the nature of the market. They recognize the way that the bid-ask spreads are so wide. But it is interesting even when you look, because we were talking about the bid-ask spreads earlier in the week on something like SPY. And if you look at them now, some of these contracts before that are kind of like around a $10 contract, they used to be maybe 30 or 40 cents wide. Now they're kind of like 10 to 15 cents wide. So I think this is starting to come back together. And this is kind of like, the thing it kind of seen about, the volatility earlier. As the credit market comes back together, we are starting to see that these liquidity concerns that had struck the market, these now seem to be very much, coming back into order the way they should be.
Let's see how that's reflected here in our most active equity options right now. It cost you $1.43 to break into the top 10 today, so that's fairly active, all things considered. That gets you to Ford, a name whose stock is almost like an option, not quite as much as it was on our last show. On our last show, Ford was threatening to break the 4 handle to the downside, so getting close to those crisis levels back in 2008. It has since rallied almost 50% from there, threatened $6 to the upside ever so briefly a couple sessions ago. Now it's trading $5.21. It's off a bit right now, so kind of halfway in the middle, but still up pretty well, pretty strong up there, and also generating a lot of options paper, 143,000 contracts. Number 9, our old friend TLRY, breaking back into the top 10. Haven't seen that one in a while up there, but lighting it up out there today. I have heard some news about some of these cannabis names doing pretty decent volume out there. I guess people need a mood relaxer with all the madness. Can't really fault them for that. 165,000 contracts on the tape right now. Number 8, good old Micron, 173,000. I do believe they had earnings this week. They had them on Wednesday, so that's contributing obviously some of that volume. Number 7, Uber, $1.79 on the tape. Number 6, Microsoft. We were talking before, speculating about why Microsoft has been so busy of late, but of course it's because they own Skype. I don't know how we all blanked on that on our last show. Everyone's talking Zoom, but Skype, we're currently coming to you via Skype, and Microsoft, of course, infamously bought it back in the day. Has proceeded to, quote-unquote, upgrade it with downgrades pretty much ever since. But it continues to work, and it continues to be a way a lot of people are staying in touch right now, and hence driving a lot of Microsoft paper, obviously, because it certainly ain't Office. Number 5, GE, 199,000 contracts. Number 4, Tesla, 263, talking about making ventilators in upstate New York. We'll see if that comes to pass. Number 3, Bank of America, 280,000. Number 2, it's ticker symbiote there. I almost said it out loud. It's easy. It's so confusing. Boeing, our friends across the street there, a.k.a. BA, not BAC, 294,000 contracts. And number 1 with the bullet, yet again, Apple continues to just dominate the charts up. Not quite 400K, a little bit below it, 397,000, but still a fairly active day, all things considered. And there are still some earnings popping off. Like I mentioned, Micron earlier this week, GameStop, Lululemon after the bell today, KB Home. So a lot of interesting names to discuss here this week. So if you like a little bit of micro, and it is sometimes a little bit alleviating of concern to just drill in onto a micro name and see what's going on. Everyone's kind of predicting a train wreck for earnings season this year. So check out the earnings move and earnings move results report, see what the market is actually pricing in for some of these names, and we'll kind of check out this train wreck together. TheOptionsInsider.com is the place to go for all of that information. Meanwhile, it's us to keep on rolling. It's time for us to go into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block, the portion of the show where we explore weird, wild, wonderful, whimsical paper that is lighting up our tape here. And David, I knew you were going to fit in well on the show. When here you are, only your second appearance, and you're already coming armed with some odd block trades to parse here. So I'm excited. I'm curious. I want to see what you have up your sleeve for us, sir. So hit us with the first one, if you will, please, David.
Yeah, so I saw yesterday they were selling the upside in the emerging market ETF, the EEM. They were selling the September 36 calls and buying the 4173s. This company or this ETF's had some kind of event, so they don't have an even strike. But they're basically looking to say that we don't think emerging markets are going to go a lot higher. It's right now a little bit under $35. So they don't see much more upside in this. They're saying that essentially looking to sell the upside with with some protection on it. That's interesting to me because it is one of the things I think that's interesting when we look right now, the way a market has been, some of these emerging markets, this has got, a lot of exposure to things like Brazil. It more or less follows the global economy. It was not a very strong name. It's been weak for years, underperforming. So I think what's interesting when we look at this situation in the market overall is, the potential for some of these things that are dead cat bounces, and this especially applies, I think, to energy. Not exactly what we're talking about right now, but USO oil is down over 7%, 8% right now. It sticks out like a sore thumb. Energy ETF is still up 3 or 4%, but it's, kind of stalling off its highs. EEM is very similar to something like energy. So what's interesting now is some of these dead cat names are bouncing, and this is going to be an opportunity for people to kind of sell volatility in them, collect premium, which is one of the thoughts I had coming into today's show, Mark, is just really that things like small caps, kind of in my view, or energy, these are having some violent bounces. Great up. Now, some of these also have implied volatility, 70, 80, over 100%, depending where you look. So some of these now opportunity to be thinking about collecting some income.
Yeah, I'm looking at this name here, and you're right. They are. Seems like they're fading any upside. If you're not familiar with the listeners, EEM is, of course, the iShares MSCI Emerging Markets Index. That's had an interesting year. Kind of a year ago, it was trading a little bit north of where it is right now, about 42 and a quarter or so. Topped out around 46 or so, 46 and a third. That seems like that came right around, right? Go figure, right at the beginning of the year, right before all this madness happened. Not a lot of positive stories in the emerging markets realm post mid-January of this year, and this name has pretty much been straight down ever since. And it seems like our friend here fading any chance of any upside, dead cat or otherwise, here in the near future through September. Interesting. Already you got one in the books here, David. I know you're watching some other trades out there. What else you got in store for us over there in TradeStation land this week, sir?
Well, the only that caught my eye yesterday was Match, the dating company. Now, I'm not sure exactly if they think people are just sitting home, trying to find love since they can't do anything else on the internet. But, what is interesting at this one is they bought the April 70-80 vertical call spread. Now, this was a stock that had been over 90 earlier in the year. So it's looking simply for a retracement up through some of its previous kind of price range. It's interesting because this is one of those companies where when you think about it, something like, coronavirus, all those sort of things, it's this is not one of those sort of companies where over the long run, you would necessarily think that it's going to be like a problem the way hotels or certain other kind of companies are. There's been a real focus on some of these technology stocks. So it's interesting in this one, they were in April and they were buying the $70 calls. They were buying the $70 calls, selling the 80s. They paid about $3 for that spread, and they did it on about 6,000 contracts yesterday.
You're sitting at home, you're alone. I guess if you don't have a significant other at home with you, you're out there looking to find one. Hopefully you're not arranging any in-person meetings anytime soon. You're holding off on that. But I can see a certain segment of the population out there perhaps looking for love. Match, of course, ticker symbol MTCH. Listeners, they own a bunch of things. OkCupid, Match, obviously, Tinder, Hinge, a bunch of names all kind of combined together into this one holding company. Match 64.31 right now. It's off about $1.25. A year ago, it was actually trading less, about 57. So it had a nice little rally. Peaked at, of course, mid-January, like just about everything else, 92.5. So it's well off those highs. Apparently, with the global pandemic, no one was finding love. But now maybe Cupid's arrow striking again. It's bouncing off its recent low of 47.35. And this is someone out there, a 70 strike, 70.80 by April. That's actually not that aggressive since we're at 64.5, but still, that needs a bit of a run, and it needs to start happening soon. So if this rally fades, our friend here, his love may fade as well. It looks like he did that 6,000 times and 43,000 times for the vertical in EEM. All right, Mr. Rock Lobster, I hope you put your Wayback Machine pants on, because we're going to go back a little bit right now. We're not going to go too far back. We're going to go back about to February 10th, so hopefully your addled brain can go back that far, sir. And we can go back to American Airlines, because this paper we talked about on the show then kind of seems kind of prescient right now in hindsight. So back in February 10th, as you recall back then, listeners, the market, the VIX futures, everything else was still kind of underpricing what was to come, and we were debating it and talking about this. It was pretty much right before the big sell-off really kind of kicked off in earnest, I believe, the subsequent week. And we talked about what looked like at the time a pretty aggressive, pretty tight collar in American airline stock, ticker symbol AAL. And, you know, what's happened with the airline stocks ever since then? I think you could probably analyze this one for yourself, how well this one went off. But at the time, listeners, we profiled someone coming in and gobbling up 109,000 of the March 28 puts for $1.26, doing them against a bit of a ratio here, 85,000 of the March 29 calls, so putting it on nice and tight, and not quite doing it for even, because the calls are never going to be out loving the puts that much. And also he did it on a ratio, so it's not quite 1-to-1. But still, he did it for a whopping 9 cents plus factor in the ratio out there. Interesting stuff. He pretty much got this collar pretty close to for free, and he got to stop himself out at the 28 strike. At the time this went up, the stock was $28.79. Guess where it closed on expiration, listeners, on March expiration? Yes, $10.38. And go figure, this trade was still on at expiration. So it looks like someone had some underlying that they were looking to get the heck out of Dodge on, and they stopped themselves out at 28 and did a pretty masterful job, it seems like, of doing it. And they didn't take this off, so they clearly didn't want the stock anymore. It looks like they're out, at least for right now. Mr. Rock Lobster, this one seems like a bit of a home run, at least from a hedging perspective, sir. Would you concur?
As far as I can see, I believe this. We might call this textbook here on the option block. Not a bad, not a bad trade. I even like the way they added the extra 20,000 puts or over the calls, or 20,000 extra puts. So, what can you say? Pretty good timing. We looked at all of this kind of stuff, and it was given. We said they're like, this market is just not making sense. I think you actually retreated my my confusion that people were not really looking at this. But be that as it may, I think this is a textbook strangly purchase. And the thing, even if they're hedging stock, like, what do you do with it at this point? I think you just sell the puts and keep the stock at the bottom and, go on your merry way.
That's what surprised me about this. That's the only part that puts maybe in a little bit in the less savvy, if you're going to put this collar on, it's probably because you kind of still want to hold the stock, right? And yet the thing works your way. You get the hedge you wanted. You got all that juicy put premium. Take them off, and maybe you keep the stock. Maybe you readjust and get some more at a lower level if you're still bullish. Clearly, this guy's outlook ain't that bullish, Mr. Rock Lobster.
No. I don't know what the airline industry looks. I just feel like it'll be some sort of diminished anyway, just because I think there'll be less business travel. People are like, well, maybe I'll just travel this. So I don't know. I can't see how this is bullish for airlines at all, because there probably will be less. I could be totally wrong. But anyway, yes, I would figure though that, stock's $10, you might as well just sell the puts and just keep the stock and give and look for the slow grind up.
Yeah, this one gets a well-timed, if not the most savvy of ones, because if you go into all this effort to protect that stock position, maybe you want to keep it and put it to work. But apparently not. This guy wanted to get the heck out of Dodge. As we get the heck out of this segment and on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is the portion of the show where you guys take the reins, your questions, your comments. Also, we turn the tables on you guys sometimes and ask you guys some fun questions like we did this week. You know, when this rally first started, we said, hey, what's your take on all this madness? We're rallying. S&P was up at the time over 9%. It was over 2,400. And so we said to you, hey, you guys feeling this? Is this real? Or is this kind of a bit of the mother of all dead cat bounces, as we put it? Quite simply, we asked you, where are we going to close at the end of this week? North of 2,400, a.k.a. this is a bit of a real move, at least for this week. Or south of 2,400, a.k.a. dead cat bounce. And the votes came in hot and heavy very early, and all of it pretty much leaning towards dead cat bounce. And it hasn't really changed, which is surprising, even though we are still well north, nearly 200 handles north of that 2,400 level right now. We're at about a 25.75 almost out there in the S&P. But our audience still 73.1% saying dead cat bounce. Only about 17.6% of you are buying this literally. Maybe you're buying it in real life, not in our poll. 17.6% and nearly about 9%, 9.3% saying, yeah, I don't care, I'm in cash. So not really concerned with all the flummoxes of the market. I'm kind of flummoxed by this, but hey, seems like you guys are fading it. So it sounds like you're pricing in a very aggressive 175-point drop in the S&P by tomorrow's close. We shall see. All right, moving on out there to what you guys have on the brain. Alexio echoing a lot of people out there right now. Alexio saying, loving all your shows. Been digging deep into the back catalog and devouring it all. You're making my self-isolation a little more bearable. Well, you're welcome, Alexio. And all the others who've shared similar sentiments, we're happy to be giving you something to listen to and educate yourself with and maybe inform and entertain yourself a little bit with as everyone's stuck together. He goes on to write, plus I learned valuable truths like Pearl Harbor ruled and iron condors are for cowards. Thanks so much. This guy's going deep into the back catalog. The iron condors, actually, he misspoke. Well, first, Pearl Harbor ruled, that's the meatball. I can't take any claim for that. He's the one who says Pearl Harbor is a good movie. I could probably take the other side of that one, but that's a conversation for another day. And the iron condor is for cowards. You kind of chopped it a little bit. That was our old buddy Mr. Schlesinger on the Volview show way back in the day. And he said, iron condors are iron butterflies for cowards. That was his exact quote, which is one I've always loved to this day. But yeah, we're here with your Alexio. You guys can get all of our stuff on the network. You guys know where to get it. If you're listening to this, you certainly do. And, of course, we're happy to keep cranking out the content. You guys are loving it right now, and you certainly need it. Everyone needs it right now, so we're happy to keep cranking out a bunch of fun stuff for you. Stay tuned to the network. We got more coming in the hopper. Did a special live. I even dragged Brian to do a live Options Playbook Radio to answer all your questions live last night. It's been fun, so hopefully you guys are enjoying all the slew of content that's been heading your way. Knack has the question. I think we've answered this question just about every show this week, yet it keeps coming in. Everyone clearly has this question. This one happens to be from Knack, but many of you have asked it. Everything is electronic at the moment. What the heck do we do if everything has to shut down? This is the question. I'm curious, David, we're getting this question a lot. You guys must be getting this question just en masse over there at TradeStation. What are you telling people right now, sir?
Well, we haven't seen any, real impact from this. Something that we had a brief discussion around here, in the office, some of the people on my team, and it's not really something that we see as being any kind of issue. What is interesting is, we are at this point, actually offering a special sort of promotion for listeners of the show. So if you're really trapped and you have nothing else to do, you can go to tradestation.com/optionsinsider for more.
There you go. And everyone else out there who has this question, which is clearly many of you, the OCC has been kind enough to, because clearly they're getting this question too. That's the place I send everyone with these kinds of questions. They have structural concerns about what happens on expiration and settlement. OCC are the folks who determine that, so that's the place you should go. And they just came out with the question, their unscheduled markets closings guide, closings plural. So search for that OCC unscheduled market closing guide, closings. I missaid it. And you'll find it. Just go to the OCC website and you'll find it there. It breaks down all the different scenarios you might have. Also worth remembering, we talked about it before on the show, the options do not expire just because the market is shut down. You can't close them out, but you can still exercise them. So as long as your option is alive, as long as the contract is still going, you can still exercise it if you're long. So that's something to keep in mind if you think if there is a halt, an unscheduled halt, and you think it might open lower and you have puts, for example, which is what a lot of you are writing in about, you can exercise those. So keep that in mind. All right, more comments. Eli British. I like that handle. Eli British saying, hey, options all-stars. Long time, first time. Thanks for the show. You guys are a point of sanity in insane markets. Keep them coming. We've all got some time on our hands these days. Well, thank you, and you're welcome, Eli British and everyone else out there who's enjoying this fun stuff. Next up, Anthony. Anthony wants to know, are you surprised at how well the options markets are holding up during this crisis? What about the brokers? Seems like outside of Robinhood, we haven't really seen any major outages. Well, yeah, I'm very surprised. I've said this before. I thought when we first went all electronic on that Monday on options, it was going to be a disaster. And yet, we really haven't seen that. We've seen liquidity widening out, as you might imagine, spreads widening out, things getting a little less displayed size, which is kind of normal, par for the course for any sort of crisis time. But we hadn't had a crisis and be all electronic at the same time. I thought that combo was really going to cause damage. And yet we, so far, fingers crossed, have not seen the massive shutdowns, massive outages, crazy prints that we perhaps expected in a time like this, which is interesting. Good point about the brokers, too. Mr. Uncle Mike, first, I'll let you chime in on this one. Any thoughts here for Anthony? Are you also surprised that so far, so good, how well the options markets are holding up, given the fact that we're at crisis levels of vol, crisis spreads, and completely electronic all at the same time, sir?
Well, it's like we've had a lot of crises, not near to this magnitude, but even in recent years with the hurricane in New York, with Katrina. I mean, we've had things like this, but nothing near to these levels. So we've kind of had some trial runs with us. So I'm excited, just for the sake of our business, that things are still working well with everyone being at home right now. So I think that's good. And I did want to add something to that American Airlines collar. The only thing that I could think of that the person doing that, maybe the bid-ask spread on the long put was super wide, and he just decided to exercise the put and then buy the stock again. That is a possibility if he felt that it was the bid-ask spread was too wide to just simply sell the put and buy more stock. I'm not sure, but that was one other explanation that I was thinking of just as you guys were talking about it.
So maybe we'll give him a one extra half mark in the savvier column, because you're right, things are a little wide. You don't want to sell them out underwater. That would be silly. But yeah, interesting stuff out here. Mr. Rock Lobster, are you also surprised at how well our all electronic options markets, indeed our all electronic financial market, are holding up in this madness, sir?
I am. Actually, I mean, I don't know. To be honest, I think the reality is the electronic marketplace makes this easier. To be honest, you don't have to be on the floor. Even since I was an electronic market maker, which feels like a million years ago, everything has gotten so much better. And I mean, the reality is you're just going to see less posted liquidity, but that doesn't mean the little eyeballs are in there, grabbing volume when it's close. So it worked well, considering this was a pretty major catastrophe. The OCC system worked pretty well. I wish, to be honest, that there was a system like this to clear over-the-counter derivatives and stuff like that, swaps and all that, something a little bit more robust like the OCC runs to maintain capital requirements. So that would be my personal toss out there, to have that kind of, the third-party sort of clearing system, make sure people have cash going. But, I think most electronic systems worked well, except for Robinhood, but we don't count them because I don't count that as actually I don't count that as a brokerage. But yeah, I'm not super surprised, but actually I'm pleasantly surprised. I did a lot of contracts. I really didn't have a huge trouble getting any fills, even, flies and stuff like that. There were mornings where stuff was tough to fill. But I was kind of trying to jam a price in there because it was a good opportunity, and I knew we weren't going to be there. The market wasn't going to be there long anyway. So I just put myself in the shoes of, if I was this guy on the other side, I would be squeezing the crap out of everything too, making sure people try to give me an extra dime or nickel or something. So, but I thought it worked. Overall, it worked well. I was just saying, I was pleasantly surprised.
First, you're optimistic, then you're pleasantly surprised. Who are you, and what have you done with the Rock Lobster? As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what's on our radar, what we're all keeping an eye on for the rest of this week into the weekend until we can all gather here back on the show on Monday. David, we'll start with you, sir. What is on your radar? What are the TradeStation faithful? What are they watching out there as we head on into the weekend, sir?
Well, we actually just put up for the benefit of people who have been listening to Options Insider. We have just put up a special story on our blog that highlights all the ways you can use a TradeStation platform that automatically creates option strategies for you. So it can be super useful in this sort of environment when you maybe don't know all the different ways strategies work. So if you go right now to TradeStation.com and you look for the Market Insights blog in the nav bar, you can find this article we've just done right now by one of my colleagues over there, and it highlights some of the newer functionality in our web trading platform that we're really excited about.
All right, check it out, the Market Insights blog over there at TradeStation. Mr. Uncle Mike, same question for you, sir. What are you watching for the rest of this week into the weekend?
Well, I mean, watching the news, of course, to see where we're at with everything. Not really a lot in terms of specific levels, just because the market bounces around so darn much. So watching, I would say, the news at this point. At some stage, when we get back to normalcy, when markets start moving 0.5% to 1% a day, then, or at least normal as far as I've known it in my career in the business, then I'll start to be more concerned with various levels. But news will trump technical analysis 10 times out of 10, in my opinion. And so I'm just watching the news.
You're just waiting to sling that silver collar. You know it. You're waiting to adjust it. You're sitting there poised on the trigger finger to adjust that bad boy. Last but not least, Mr. Rock Lobster, sir, what are you watching for the rest of this week, at least perhaps until we can gather here together again tomorrow on Volatility View, sir?
It's me or Mark, I'm not sure. But ultimately, getting people back to work, that's the thing. Getting past this crisis, the faster we can manage people's health if they get sick, that's a big thing. Getting people back to work and getting lives back to normal and starting to, formulate plans coming out of this. I think that's pretty much that's all there is to look at. And I'm not sure if we keep rallying. I think this is probably who knows, a little higher, a little lower. But if we can't get people back to work and this gets worse, those lows, we'll see again. I'm cautiously optimistic. I am not insanely optimistic, but I think ingenuity will end up winning on this one. And I think we're fortunate. We just weren't first. The Chinese were first. It was rough on them because they didn't know what they were dealing with. And I think we have a lot more data about how things work. And I think they'll be crunching that data and try to figure out a way around this. And for New Yorkers, stay home. Stop going. Don't come to Maine. I can see the car license plates already.
Don't come to him.
Stay in New York for 2 weeks.
Don't come to the Rock Lobster. Stay away from him. He moved there for a reason. Get away from you people. Don't come to him. All right, that music, listeners, means unfortunately we got to bring this rolling festival of optimism to a close here. But before we go back around the horn, checking in with everybody, see what they have cooking that may interest you. We'll start with David over there at TradeStation. David, you kind of already mentioned the blog. Any other interesting, functionality or things going on in TradeStation you want to let the people know about? Now is the time, sir. The floor is yours.
Well, as I'm the thing at TradeStation, I'll just say I think it's interesting at the other side of this. This is going to be an interesting situation for technology, especially what we saw at Micron saying today about how coronavirus is ultimately boosting demand for technology.
There you go. The optimism continues. Check them out for yourselves over there at TradeStation.com. Make sure to put that / TradeStation.com/Options Insider. So I know you're listening to this show, which is always fun. All right, Mr. Uncle Mike, same question for you, sir. If folks are intrigued, they want someone to help them, coach them, guide them, just hold their hand during these crazy, tumultuous markets, where should they go? What should they do, sir?
Go to stcharleswealth.com, and once these things clear up, I might be doing some type of educational event on, I'll entitle it, Getting Back to Even with Minimal Risk. But stay tuned for that. That's coming in the next couple months once we get the virus thing resolved.
Are you going to talk repair strategy, sir? Is that your big plan? Is that what's happening?
No, actually, beyond that, quite honestly.
Oh, okay, cool. Interesting. I'm intrigued. I didn't want to let the cat out of the bag. I'm just intrigued. Find out for yourself. Learn more over there, stcharleswealth.com. And last but not least, Mr. Rock Lobster, if folks are intrigued, they want to join a vol trading club, maybe get a newsletter, maybe check out a trading room or a webinar, where should they go? What should they do, sir?
You can go to the Vol Trading Club and see how to run a profitable trade for every week or 2 times a week for this entire cycle. Everything's traded live, printed live. You want to actually, learn how to trade vol and have tons of examples and webinars and all kinds of education. This is our bread and butter type of thing, so it worked well for us. Anyway, come over to optionbit.com and go to Vol Trading Club, the memberships there, and check it out and get some vol learning on, some vol learning and some vol trading.
There you go, optionbit.com. Get your vol learning on. That's their tagline. And on behalf of the Rock Lobster and Dave, the market spy over there at TradeStation, and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in those questions. Keep them coming. If you need more in your ear holes, I won't blame you. These are troubled times out there, so stay tuned. If you're listening live, we'll pump some fun live shows in there for you, maybe a little bit of our OPR, special pandemic huddle, that we did last night. And then we'll be back in exactly half an hour on TWIFO to talk about all things going on in the futures option side of the fence. And there's a heck of a lot going on there from a vol and skew and everything else perspective, too. So if you're listening live, stay tuned for that. If you're listening after the fact, just hit next on your device of choice. TWIFO will be there waiting for you. And we'll see you back here tomorrow. Volatility Views, 1 p.m. Central, 2 p.m. Eastern. Then we kick it all off again on Monday with more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.